So right about now we are going deep to learning how to trade a bullish trend, right? Alright, so what is price action for those who are just joining us? Price action is the study of previous data to anticipate what can happen in the future, right? So that's simply price action. We don't necessarily use indicators, or we can use indicators to, just to for some few calculations though, but we don't really base our analysis on indicators, because we can just simply use our eyes to see what was going on back in the days to predict what's going to happen in the future. Just like weather forecasting, just like it's just like how people just take the old data to just try to anticipate what's going to happen in the future. Right, fine. Right, so as you can see, this market is bullish market, as we explained in the last video. When the market is making some higher highs, and some higher lows, the market is going upwards, or bullish or buying market. All right, so how do you trade such trades, right? So as you can see, when the market goes up all the way and makes this high and goes down, and what you need to do is, as you are analyzing the charts, right, you go to your objects and draw a horizontal line, right, a straight line like this. Okay, so this line, once it gets bridged, okay, this signifies that the market is going to go all the way up, right? So when this market gets breached by a bullish candle, by a strong bullish candle, I'll show you afterwards. This is just a 2D example, but I'll show you in actual context of the candles how they would look like. So if the market gets breached like this, okay, you enter this market knowing that the market is gonna go all the way up. Why? Because this high would have been broken, so this will signify that the market is gonna go all the way up. So what you're gonna do is, though of course, since you'd be practicing price action, meaning that you would have taken previous data to analyze what's going to happen in the future, which means you already saw that the market has been so far been making some higher highs, and you now they try to catch this bullish market, right? So you first have to analyze the previous data to catch the current data on your analysis, right? So when the candle breaks this this current high, right, so you enter like this, right? You put your stop loss right below, just leave a small space right about there, some few pips. And then how do you anticipate this move? Because this move won't be there yet. All right, so what you do is you simply measure these bullish moves. Okay, the average, these bullish moves, they'll be there everywhere. Okay, these bullish move, just before this downwards move, this downward move, we call it a market retracement. Okay, so when the market goes all the way up, we call it impulsive move. Retracement, impulsive move, retracement, impulsive move, retracement, impulsive move, retracement. So when the market is moving in such a phase, okay, we really scan almost many impulsive moves, which are these. When the market is going up, we scan them, we just measure them, just like so. I measure this one, I measure this one, and mind you, they won't be of the same size, but I just roughly estimate with my own eyes to, let's just say, the average, they reach this, they surpass this move, right? And I can just move my maybe let's say my line like this, yeah, my line, because in price action you are allowed to use all these are your tools, guys. You don't have to be scared about that. These are your tools at your disposal when you do your market analysis. Okay, so I would have used my line, and then I can just put my line right about there, like so, and in anticipation that when I enter right about there, my buys and my stop loss right about there, I know that this move would be much respected, so my analysis would be 1.4, 1.5. okay, so this is how you trade a bullish move, right? Again, bullish moves are traded like so. If you see this high, this retracement,